On global markets, the next meeting of the Federal Open Market Committee (FOMC) is scheduled for this week. A change in interest rates can almost certainly be ruled out after the rate hike in June. At the same time, the statement will confirm the course of monetary policy and thereby market expectations for another rate hike in September. The week is also full of releases with a potential impact on the EURUSD. From the Eurozone, the flash estimate for inflation for July will be in focus. From the U.S., alongside the FOMC meeting, the ISM Index, ADP employment figures and labor market report are the heavyweights scheduled. See currencies. Regional currencies had a rather good week last week. All currencies firmed against the euro by 0.5 to 1.0% with W. The Koruna had the highest of the gains after CNB chief economist Tomas Holub said that the new forecast implies a much stronger interest rate path than the one in May. The EURUSD thus tanked, on expectations that the CNB can already hike this week. In this environment, the CNB would have to find very good reasons why not to hike. We think that they will not think too much and will deliver the increase to 1.25% this week. Thus, the Koruna is likely to stay strong. The EURPLN also fell to a 5-week low, helped by good international sentiment. The forint was also in a good mood, gaining almost 1% last week. This time, unlike in previous weeks, the Romanian leu also followed regional peers, which is likely not independent of the decline in interbank liquidity, likely due to companies making payments to the budget in July. As inflation is running high, the central bank might not be unhappy with a somewhat stronger RON, especially as, at times of global market stress in earlier weeks, outflows from reserves could be perceived, indicating the NBR's presence on the market to tame depreciation pressures. See rates and yields. Bond markets could also not complain much, although developments were not as unanimous as for the FX market. The biggest gains were on Hungarian 10Y bonds, with yields falling below 3.2%, and again nearly matching the yield of the Polish counterpart. Hungarian interest rate expectations altogether, especially for Oz, have been in a decent declining trend since late June, which seems to have gotten a further boost by the MNB's message that loose monetary conditions need to be maintained. In the Czech Republic, however, interest rate expectations are increasing, as inflation is above the central bank target and the Koruna also added to the woes in recent months. A hike this week seems to be quite likely now, as otherwise markets could feel that they were fooled by recent CNB comments. We see risks for another rate hike by the end of this year, although this is not our baseline at the moment. We have the next hike penciled in for 1H19. In Poland, the stability of rates remains the most likely scenario, as Dovish MPC member Lon indicated that he also sees such a path as the most optimal. In Romania, the recent appreciation of the leu put our expectation for a rate hike at the August 6 meeting at jeopardy. Tight interbank liquidity and a somewhat stronger currency may altogether be enough to tighten monetary conditions, and an outright rate hike could be avoided for now. Download the full C Market Insights